Applause for CA K. Gururaj Acharya. Welcome, sir. I now request CA Siddharameshwara Gowda, the chairman of Bellary branch, to welcome the speaker to this session.
It's my privilege to introduce CA Gururaj Acharya. He basically from Bellary. I am also from Bellary. He is a qualified chartered accountant after completing articles with Mrs. Guru Prasad and Company, Bellary. He is presently the senior partner of Mrs. KG Acharya and Company Chartered Accountants, Bangalore, specializing in corporate finance, corporate taxes and company law. Academic achievements are first rank in BCom, obtained highest marks in entrance exam for South India for CA entrance, 21st rank in CA inter, 10th rank in CA final, first rank in ICWA inter, third rank all India ICWA final. He is a member of Bangalore Financial Reporting Review Group, formulated under Financial Reporting Review Board of ICAI New Delhi. He was a director of Board of Directors of State Bank of Mysore from April 2010 to April 2016. He was co-opted member of Expert Advisory Committee and Committee on Accounting Standards for Local Bodies constituted by ICAI of New Delhi. He was a member of Karnataka State Level Audit Advisory Board. He is a resource person and has addressed at various seminars and workshops in accounting standards, standards on auditing, Companies Act 2013 and LLP, corporate finance and financial analysis, corporate tax and tax audit. With this brief, sir, here welcome you to the dais and take over the mic. Thank you.
Good evening to all of you. I'll be taking the session from 4:15 now to 5:15, I suppose. And I'll be talking to you on the challenges in Companies Act, challenges to practicing chartered accountants under the Companies Act. When I say practicing chartered accountants, I want you to tell me why we are called practicing chartered accountants. Time permitting, at the end I will give my views on it, why we are called practicing chartered accountants, because I always believe practice makes a man perfect. So if practice makes a man perfect, even after passing the toughest CA examination, are we not qualified enough to say we are perfect chartered accountants rather than practicing chartered accountants? Okay? So with this small note in your mind for you to think, I will probably give my views on why we are called as practicing chartered accountants at the end. Challenges are plenty, and Companies Act has made it more challenging. In fact, you can do business through different vehicles. You can choose any vehicle to do business. The vehicle could be either a proprietorship concern, a partnership firm, a company, or a HUF, or any other type of vehicle can be chosen to do the business. But it looks like if you choose company as a vehicle, it is a sin these days. In fact, that is why probably the companies, when you go in for the incorporation, they give you a sin number. When it looks like it is a sin in that sense, and it is becoming more and more tough, you will see that. As chartered accountants, these days I have stopped signing balance sheets because the amount of work that needs to be done in one particular balance sheet is so huge that I feel that the 20 numbers which they have given, the 20 balance sheets being the maximum ceiling for public limited companies, of course for private limited companies they have relaxed. I think it's a very good number for one chartered accountant to do, because if you look at a good enough size balance sheet, you can easily make a mistake. You can very easily make a mistake. So that's the type of work that gets into the making of a balance sheet, and unfortunately the people around do not appreciate it as much. That's the very unfortunate part of it. So what are the various challenges to the practicing chartered accountants? When I mean practicing chartered accountants, I'm fully aware that there might be some chartered accountants in the industry here. This particular session also addresses their point of view. Almost all privileges available to a private limited companies are removed. Thanks to the 5th June notification, 5th June 2015 notification, some of them got reinstated. And the biggest challenge is to know which are the privileges which are now available to a private limited companies. Because initially when the act came in, a lot of privileges got removed. Then a lot of insertions happened, and today you don't know how many privileges are there and how many are not there. So getting to know the track of it, we have done several sessions just to see what are the privileges available to a private limited company. Then we have on the top of it the various class of companies which we need to keep track of. You know, where does a women director need to be appointed? In which company should a CSR be incurred? You know, where should an internal auditor be appointed? Different sections talking about different parameters based on share capital, based on turnovers, based on the net profit, based on the net worth. That needs to be kept track of. You know, that's a big challenge. The bigger challenge to chartered accountants is when the companies, they are actually in fact companies, they are running it like a proprietorship concern. They have a running account, a current account with the owner. I mean, they feel that, you know, section 185, section 186, they don't understand anything of it. And, you know, they just say that it is my company, so I do what I want. So this is a bigger challenge to the practicing chartered accountants. Difference in definitions with respect to Companies Act, accounting standards, SEBI. If you look at what a subsidiary is as far as the Companies Act, as far as Companies Act is concerned, not only the company share capital, also the convertible preference share needs to be taken into account to arrive at the subsidiary relationship. Whereas if you look at the accounting standard, they don't talk of the convertible preference shares. So like that you have several differences between the statutes which we need to reconcile when we need to address that particular aspect of it. Huge penal provisions. Penal provisions are so huge. If you default deposits, if you default the section on deposits, knowingly or unknowingly, okay, there is, I mean, at least for chartered accountants, we have one section which says willingly if you default and unwillingly if you default. There are certain lower parameters, lower penalties for willing and unwilling aspect. When it comes to deposits, the penalties are to the tune of 1 crore to 10 crores on the company, 25 lakhs to 2 crores on the officer in default, leading to an imprisonment of 7 years. Now you may feel CARO reporting, because we finally have to report as chartered accountants that the company has in fact violated deposits. And the implication of this violation being reported, there could be two implications. One is that the company has violated and he doesn't know that he has violated, and the chartered accountant who is paid the fee by the client, you are now telling to the government or the registrar of companies or the regulators that look, he has violated this. Now he will then be penalized and he will say, my goodness, because of you I got caught. I mean, that's not because of the mistake that he did, because of the mistake that was pointed out by you in your audit report that I got caught. Now this could be a bigger challenge. Therefore, we have to, I mean, I will come to the conclusion when I say what needs to be done by the chartered accountants. We need to forewarn the clients. If we don't forewarn the clients with all the, when the implication of my reporting could be manifold. So I need to definitely keep them abreast of what the implication could be before my reporting itself. Exit route companies have already been formed, have been running. Private limited privileges were there from 2013 to now. And with the 2013 Act, a lot of privileges got withdrawn. So can I now shift from a bigger ship, which I don't need, to a smaller boat? I mean, I would like to carry on my business with a smaller boat, because after all, I'm catching fish, a smaller fish that too. So that is my business. So why do I need a big ship for running the business? I want to now get down into a smaller boat and do the same business. Unfortunately, the window available for a company to be downgraded, I mean, I wouldn't say convert, of course the word is a conversion, the company to be converted to LLP. when we wanted the government to actually minimize the constraints for the conversion. In fact, all of us know that a company can be converted to an LLP. Provisions are there in the LLP Act, okay? But unfortunately, there are provisions in the Income Tax Act also. Section 47, subsection 7 to be precise, gives out when it is not considered as a transfer. When a company gets converted to an LLP, it is not considered as a transfer if this company does not have a turnover of 60 lakhs. Now that was the, we thought that we were making representations to say that let there be a one-time waiver so that maybe if 60 lakhs is fine, but for 1 year give us an opportunity to come out and become an LLP or a non-corporate. I don't want to face the rigors of the Companies Act. I am not a true company in that sense. But instead of reducing the rigor, the last budget went on to say, apart from 60 lakhs of turnover, the benefit of conversion not being treated as transfer will not be available if your assets in your books of accounts is more than 5 crores. So if you want to get the benefit of transfer, benefit of the provision of the conversion from the company to the LLP, not to be reckoned as transfer, you will have to comply with two conditions: that your turnover should be less than 60 lakhs and in any of the previous years, and the second condition is you shall not have total assets in your books beyond 5 crores. So these are the two conditions you need to address. Now, the bigger challenge is for the chartered accountants, especially from the mofussil areas, where they may have the audit of 1 or 2 companies. I keep telling this, even if you are doing the audit of 1 company, you need to know the entire act. The entire act. You don't have there is no benefit available to a chartered accountant who can say that, boss, I was auditing only 1 company, so I didn't know the entire act. So there is no such benefit available. So you audit 1 or many companies, so many the better. I mean, that you can have a specialist for taking care of that particular section. If you are all in one, you are only putting the dosa, you are only putting the idli, I mean, you are only doing everything and surveying. So that becomes a big challenge for the small-time SME chartered accountants. Now, to top it all, we have the cherry on the top of the cake in the challenge situation, which is the changes are happening more than the Income Tax Act itself. When Income Tax Act, probably if the change happened once in a year, there is a big session which happens in this very hall where budget changes are announced. But you know the changes in the Companies Act are happening by the hour. Mr. Panaraj knows this, that I always tell this. I don't know what has happened because I'm supposed to tell you the latest challenges. I came here at 4 o'clock, maybe I came at 2:30. From 2:30 to 4:30, whatever has happened, I don't know. I mean, that's the amount of changes that is happening in the Companies Act. Changes by the day, changes by the day. Now, in fact, this is one of the slides which was shown by Mr. Sundareshan, Company Secretary. Year on year, you will see that there were 73 circulars, 76 changes in the rules, 46 notifications, and 18 removal of difficulty. In fact, we don't have a problem with removal of difficulty. But the only problem we have is sometimes when they say that it is a removal of difficulty and create a difficulty. I mean, that also is a challenge that we have seen. And finally, there have been 2 amendments to the Companies Act. Any amendment is good for us because, I mean, I see these amendments as good because they are diluting the harsh provisions. Now, these amendments, certain amendments are applicable with immediate effect. With immediate effect, and sometimes they say from the date it is published in the official gazette. Okay? So I have decided in my house, which probably you can also think of, to stop subscribing to Times of India and Economic Times and subscribe only the official gazette. What do you say? Because Times of India and Bangalore Times are very interesting, but certainly not important for me. What is important to me is to keep track of the official gazette. Can I know how many of you are subscribing to the official gazette? You are subscribing, sir? No. Sorry? You don't receive it regularly. There are a lot of challenges. Official Gazette, they say official Gazette, today is, let us say, 16th of July, as published in the official Gazette, when they say, it would have been, if you look at the entire website, you will not get the official Gazette, and maybe on 20th, you will get that official Gazette already done on 12th of July. You will have such challenges also. Now that's a very big challenge which we are facing. One such change may not be to the practicing chartered accountants immediately, to the practicing chartered accountants, unless, I know a lot of chartered accountants who sit on one side and do the accounting, do the director's report, do the everything, and come on the other side and say, it is the responsibility of the management to do everything and do the audit this side. I'm very happy that Pampanna is there. No, he's there somewhere. He has not kept the video. Oh my goodness. I see the video. I thought there is no coverage. The point is, when you are doing that side and doing this side, you will have nobody to sympathize, nobody to oppose. You are your own boss unless you get a notice. There are no checks and balances. What we call SODs. SODs in IFC, in internal financial controls, segregation of duties. The segregation of duties is a very good mechanism to check the mistakes, if at all. When he is doing something, I do the checking and point out that, this is wrong. And that is a wonderful situation, especially when there are sadists. When there are sadists who say that I derive pleasure in pointing out your mistakes. Unfortunately, when you are doing both, you don't have that pleasure of the apostrophe. Okay, so that is the biggest challenge. Now on 30th of June, we are sitting here on 16th of July. I'm sure a lot of you would have already finalized the director's report. The director's report from 30th June to now. Okay, suppose 10th of July you have finalized a board meeting and you have signed and finalized a board report. They say that with immediate effect, the board report shall contain the following details. Now we always used to have the details pertaining to remuneration to the people who are drawing remuneration of more than 5 lakhs per month and more than 60 lakhs per annum. Thankfully, that has got increased to 8.5 lakhs and 1 crore and 2 lakhs. So that is a welcome change. But there is a very problematic change. The problematic change is, now from now onwards, the company has to list out the list of top 10 employees by remuneration, and give the details that has been called as per this particular rule 3 of that particular chapter. What is this details that is required? In so many companies, I am sure, the remuneration is actually a very privileged information. All of you agree? My remuneration should not be known to the other person in the company. The companies have a mechanism to ensure that the remunerations are top secret. They would not like to share the remuneration between the employees. Now this is a public document. Okay? So the board report has to list out the list of top 10 employees. In fact, initially when I thought they have to just list out the names of the top 10 employees. But later on, when I did the fine-comb reading, it was clear that they have to give even the remuneration, their educational qualification, nature of employment, the nature of past employment, what is the name of their children, that is extra. Okay, so you'll have to give so many details like that, the privileged information to become public. Now one may say, companies were anyway giving remuneration of more than 5 lakhs, this particular details. But what about those who are drawing less? Now probably they will also come in the wash. So that list of top 10 employees. Now one is the problem of declaring. The other one is there is no time available. 30th June, if there is a notification made available, from the next day onwards, you are supposed to give this particular. Now when the notice comes from the ROC, if you have not done this, he has got 2 or 3 years time to analyze it and find out if there is any mistake, and he says, why you did not give that? Now we may say that, we didn't have a learning time. Our conference happened on 16th of July. Maybe after the conference you should probably make it applicable. At least there must be some respite saying that 3 months there is a cooling period for any particular notification. A biggest challenge to the professional. For the listed companies, lot of disclosures are required. Fortunately, the disclosures have got minimized. Let me tell you, the earlier disclosure that I was talking about is applicable to all companies. Private limited company, 1% company, half% company. I mean, you may have any small company also, this reporting is required. There were certain additional requirements which was required by the listed companies, so those have been diluted. So some of the requirements have got diluted. Now I come to one of the favorite topics for the chartered accountants, audit report. Audit report, section 143, subsection 3. I always like this particular section. That is the assessment order under Income Tax Act, the audit report under the Companies Act. So the auditor who gives the audit report under 143.3 shall state, his audit report shall state lot of things. Now we know what we have to state. But one of the new things which has come by way of item number I is whether the company has adequate internal financial controls in place and whether it is operating effectively, whether such controls are operating effectively. In Karnataka State Chartered Accountants Association and in so many places I have spoken about how the IFC has reporting, how the IFC audit has to be approached by the auditors. Last year for 14-15 it was an option. Anybody used that option? Anybody used that option? Nobody would have dared to use that option. Okay? So from this year onwards it is mandatory. So what do I do? I mean, some of the companies, some of the auditors I know what audit report they do is from the last year they copy to this year. If there is any change, they look into the audit report of Infosys and copy it from there. Please look into the BEAR Act. Please look into the requirement. Okay? It is not that Infosys is a standard. Infosys is not BEAR Act, or for that matter any other company, Tata's or whichever company is the BEAR Act. You may look into, you may study to find out if there are any mistakes. I mean, that should be the amount of confidence that we should get into. That amount of confidence we may probably get into only if we have read the BEAR Act. We have read the BEAR requirement, the guidance note. But well, who has time for all that? Give us a capsule. Let me give you the capsule. What is a capsule? Internal financial control reporting has to happen. Now all of us know that controls are very, very important in the business. All these days as auditors, we used to talk about what has gone wrong. We used to comment upon the qualifications in the financial statement. Is the true and fair reflection of these affairs of the company got reflected in the financial statements? We were saying whether it is a pass or a fail. We have never ventured into saying, we have probably looked into the controls. We were never commenting in a very big way, unless in the CARO we used to have a small reporting that controls for purchases, sales are in order. But in a very big way, in the main audit report itself, to comment on whether the controls are missing so that there could be something major expected to happen in future. Major accident expected to happen in future. The past is good. There could be something going wrong. So the auditor is not only required to comment on what has gone wrong, but through this reporting, he is required to comment on what can go wrong. What can go wrong? Now the biggest thing in our mind is an auditor a god? Is he a Brahma who can foresee that, how do I know that something can go wrong in a particular company? Very difficult for the auditor. What I do is, based on my audits, I will find out whether there are systems in place. Whether there are systems in place, it is just like I go to a doctor and find out, oh my goodness, you have a high fever. So I will say that you have a high fever and I report, he has got a high fever. Then I do the ECG and say, there is a possibility of your having a heart attack in future. Now exactly, the IFC report is like is auditor becoming a doctor, going with the stethoscope, going with the ECG instruments. These are all the tests which we talk about to find out if the systems are robust. All these days we were only saying, in the last year he had a heart attack, in the last year he had a high fever, he had a typhoid, joined us. So from the next year onwards, we are not commenting on this, we are commenting on, based on my ECG test, based on the lack of controls in the company, lack of brakes in the car. I mean, that's my very famous example that I would like to always give so that it is easier to understand. The company has only accelerator, no brake. So no controls. The company has brake, but it is behind the driver's back. So absence of effective control. The control, that there is a design failure in the control. Or the driver has taken a challenge that he will never use the brakes. The failure of the operations, that is operating effectiveness of the entire system is at stake. So these could be the three situations. So internal financial controls, I as an auditor am supposed to look into the design, whether the control is there, whether the design of the control is good enough, and whether it is being operating effectively. So I need to look into these three aspects when I comment on internal financial controls. And just a side talk on that, audit report format will undergo a change. Not for now. From 2017 onwards, there are a lot of changes coming in. So we'll get into 2017-18 onwards. I'm just putting it as a word. So internal financial controls. We have a big question. The bigger question is, should I comment on the internal financial controls within the main report? When I say that the proper books of accounts have been maintained, balance sheet and profit and loss account are in agreement with the books of accounts. They reflect the true and fair position and performance. And then I say internal financial controls are okay and they are operating effectively. And then so many things, and then conclude so within the main audit report itself, can I comment in my main audit report? That is a question that has been asked in several forums. The answer to that, the guidance note says, the illustrations given in the guidance note says that with respect to CARO, refer Annexure A. With respect to internal financial controls, refer to Annexure B. That's the type of requirement that the guidance note on internal financial control reporting has been, the guidance has been given that way. But can I still give it in my main audit report? Can I still give it in my main audit report? The guidance note itself, in technical guidance, there are three parts in the guidance note. The technical guidance note of the IFC report goes on to say, in para 158, which I will show you, para 158, the auditors may issue separate report on company's financial statement and on IFOCAR. May issue a separate audit report, which means can give it in the main audit report or can give it in a separate audit report. Which is better? What do you feel? Which is better? Some of them may feel that if I give it in the main audit report, my risk is less because among so many things, I just put one line and leave it. But the safer aspect is to give it by way of a separate audit reports. I mean, just like CARO and comment on as far as my report on IFOCAR is concerned, please refer to Annexure B. That is better. In my office, I wouldn't say for what you should do, at least I'm telling what I am doing or what we are doing in our office is to give a separate report. Now, why do we say this? A separate report is better? Because in the separate report, we are telling what is IFC. I am not commenting on the entire IFC. Look at this. I am, as an auditor, not taking the onus of saying the internal financial controls are okay. I am saying the internal financial controls with respect to financial reporting is okay. Okay? With respect to financial reporting is okay. Now, if I have to say that, who has defined what is internal financial control or financial reporting? It has never been defined in the Companies Act. Internal financial controls have been defined. That has been defined for the purpose of section 134, which is actually talking about the director's report. There they have defined what is internal financial controls. But internal financial controls or financial reporting has not been defined. So what I do when I give the separate audit report, and as told in the guidance note, is to say what is the meaning of internal financial controls or financial reporting. Then, before giving the opinion, I am saying what is the responsibility of the management? The management is responsible for the entire financial IFC. IFC has 5 legs. In fact, if you see the boxes here, the 5, in fact, there looks to be like 6 boxes, but there are only 5 boxes. Maintenance of financial records, my responsibility as an auditor. Authorization of transactions, whether the transactions have been properly authorized, is my responsibility to audit. Safeguarding the assets, my responsibility to comment on the safeguarding of the assets. So this is, in short, the IFOCAR, internal financial controls or financial reporting. So if you take that, the management has got 2 other limbs to it, 2 other responsibilities of operational control and fraud prevention, which I as an auditor would not like to I would not like to comment on this. So I'm not going to comment on this. I'm only commenting only on the IFOCAR. Now in my separate audit report, I am going to say what is the meaning of IFOCAR, what is the responsibility of the management with respect to IFC, what is my responsibility with respect to IFOCAR, and then before I give my opinion, you please see the guidance note, the format which is given there, they give the weakness with respect to IFOCAR. And that's the best part. I'm saying that the ECG report is fantastic. ECG report is fantastic. There has been no accidents in this particular car. The driver is very good. And after I give this report, if there is an accident or if there is a heart attack, think of this. So if there is a business failure, after I give my report saying that the controls are good enough and the company collapses, there must be a saving grace to the company's auditor. When I did it was okay. But because of changes in so many things, so changes in the systems or frauds or so many other reasons, the system could still fail. I'm putting that weakness of IFOCAR in that particular report, and then I'm going to comment on that. So that is the advantage of giving it by way of a separate report. The questions that could come out are, questions that in a small company, can I give it inside the main report, and in a big company, I will give it in the outside? The answer for that, in our office, again, I'm telling you, we have decided uniform. We will follow the uniform methodology. The bigger question is also when we were discussing over the tea, the question that could come out was, what about a one-man company, a one-person company? Do I have to do all the detailed checking as has been told? Now, how do I do? I mean, there are a lot of procedures which have been told. Is it applicable for all companies? It is applicable for all companies. In fact, CARO, the 16-point CARO comment is not applicable for certain private limited companies. But IFC has to be commented by every company. If some of them are expecting that there will be some change, I don't think there is going to be any change on this. Because the government is very clear, the ministry is very clear that if the company is performing, we would like to know whether the systems and controls are good enough for it to be a going concern. So for that aspect to be brought in light, I think this internal financial control is very important. Now, commenting it by the auditor also probably, if not the auditor, they will ask the cost auditor or the company secretary to do it. So instead of they doing it, better we do it. Okay? So I think that's the game. So there will be no change. So therefore, we have to live with reporting on IFC. It is applicable to everybody, applicable only to year-end reports, also applicable to consolidated financial statements. If I'm preparing a consolidated financial statement, the audit report also has to have a consolidated IFC report. I mean, what has happened is this year, CARO need not be provided in a consolidated financial statement. CARO, they said, needs to be given only for the main audit report and not for the standalone financial statement and not for the consolidated financial statement. So there are a lot of requirements. In fact, that itself in itself is a session. I would not like to get into that. Bangalore branch has done the wonderful job of hosting it in the YouTube. You can watch a lot of lectures on IFC, including me talking on this particular subject. But one of the things that is required is, when we come to the audit report finding, is to finally find out, do the audit procedures, to find out, and this audit procedure is not very simple. It is not like doing a regular voucher. It is getting into the understanding of the company, understanding the systems, and finding out if there are any weakness, and if that weakness is significant or material. If it is just, I mean, again, these are all English words. If it is significant, I just need to inform the management, look, there is a possibility that, you know, somewhere down the line, there may be an accident. But if it is material, I am going to put it with full force and say that there will possibly be an accident in future, so I am going to report it in my main audit report. So we can, I mean, in the IFC audit report. So there could be situations in the audit report where my main audit report will be clean and my IFC report may be qualified, adverse, or it could be disclaimed. No, the vice versa is generally not possible, but the situations could also be there. So what is deficiency, what is significant deficiency, what is material weakness is a subject in itself which has to be understood. But for large companies, the procedures have to be very detailed. But for a one-man company, for a one-person company, again I'm telling you what we do in our office, we have categorized our clients into A, B and C. Okay? A, B and C. Category A type of customers, clients, we say that these are the companies which are listed, which are having big bank borrowings, which have real shareholders, and the persons who are running the show are different from the persons who are actually operating it. So for them, we apply the entire procedures in totality. Then there are the C types of customers which are actually owner driven. The checks are signed by the owners, the purchases are authorized by the owners, they only go to the market, they only buy everything. So they are the C types of customers who do not have a big bank borrowing. They don't have a bank borrowing at all for that matter. So for them, I think we can be slightly, the entire operation itself is so visible, so transparent that we don't have to really do a detailed penetration and then find out that and say that, okay, everything is fine. On the face of it itself, it is very clear. Then there are the B types of customer who are a mix of the A and C. For them, your approach should be the mix of A and C. I think that would be a take-home point from this session. CARO 2016 applicable for all companies unless they fall into the exceptions which are listed out. Let me spend a couple of minutes on the changes that have happened. CARO 16 points have been notified as against 12 points in 2016. Managerial remuneration is a new aspect which has been brought in this particular thing. And the best part, what it asks is, has the company complied with the requirement of section 197 read with schedules 5 of the Companies Act when it is giving managerial remuneration. That means these sections have told what is the maximum amount of managerial remuneration that could be paid, which is applicable only for a public limited company. And the best part is, this is one of the privileges even now available to a private limited company. So when you are commenting on CARO for a private limited company, you just say the provision with respect to section 197 is not applicable to a private limited company. So for a public limited company, check up if there are any breaches and comment on if there is a breach adversely. So Nidhi company is a new requirement. Related party transactions. Whether the company has entered into related party transactions and thereby complied with the requirement of section 177 that is going through the audit committee and section 188. 188 is a very detailed section which says that if the transactions are entered between related parties, first of all we need to check whether it is done at arm's length and whether it is in the ordinary course of business. If it is so, then you don't have to do any procedures. If it is no, then you will have to go through the board approval, and if it goes beyond certain transaction amounts specified, then you will have to get the clearance from the general body meeting itself. So that is required under section 188. So have you complied with the requirement of 177, 188? What could be the challenge for the auditor? The biggest challenge for the auditor while commenting on this is, when the company has told that it is at arm's length, how do you verify whether it is in fact done at arm's length and whether it is in fact done at an ordinary in the ordinary course of business? So these are the bigger challenges. Again, it could have an implication on the transfer pricing study and things like that. So that is a bigger challenge in itself. So private placement. So we need to comment on whether the company has done any private placement or preferential allotment. Now what is this private placement? Preferential allotment means I am allotting shares other than to the existing shareholders. In fact, I would say these are all the existing shareholders. If I allot to the existing shareholders, I have to go through the rights issue. However, the Companies Act has told that I can, instead of giving it to the existing shareholders by taking the approvals from the by passing special resolutions, I can do a private placement or a preferential allotment. The word preferential allotment, the word prefer, there stands for I prefer these people over the existing shareholders. So that is preferential allotment. Now what is private placement? I mean, a popular example I give is the PP. Private placement stands for PP. The PP calls particular person phone call. If within the outside of the existing shareholders, I prefer somebody by name, then that becomes a private placement. So that is a private placement. There are a lot of rules specified. As an auditor, I need to check whether all the rules have been complied with. Non-cash transactions. Non-cash transactions are not the same as 269 SST. Non-cash transactions with the directors, if there are any, needs to be commented here. And whether the compliances of section 192, which is basically taking the approval from the general body meeting, has been taken. Then registration with the Reserve Bank of India under section 45(1)(a) applicable to those cases. What are the sections modified? Clauses modified. Immovable property. In fact, one of the important section which has got changed is whether the fixed assets, whether the company has fixed assets, immovable property, whether the title deeds are in the name of the company. Now, this is a very new requirement. A lot of challenges have been faced. First of all, to say, what are title deeds? Title deeds, all of us know, are nothing but the deed which conveys the ownership for the owner. It could be a sale deed. Definitely a sale deed is a title deed. It could also be, if the company has converted from a LLP to a company or a partnership firm to a company, the deed in the name of the erstwhile proprietorship concern, partnership firm, LLP, read with the conversion certificate, becomes the deed of the company. We don't have to comment adversely in such situations. It could be a solid agreement entered into by the company on which the possession is taken. That itself is a title deed which is in the name of the company. Because for Transfer of Property Act, I mean, what I'm trying to say is the registered sale deed itself is not the only conclusive proof to say that the title deeds are in the name of the company. So I will stop here, and the other changes, not very material, so I can skip in the interest of the time. But one of the questions that always comes to the mind is, if in case I have reported anything adverse in CARO, what is the implication of this adverse reporting on my main audit report? Should I again report it in my main audit report? Should I qualify my main audit report? Let us say, when I was talking of deposits, in fact, deposits is a very scary subject. There are deposits which are taken in the name of deposits, and there are deposits which are not taken as deposits but taken as something else, but actually could become deposits in the eyes of Companies Act. When you see this, you don't know that you are taking deposits. The advance from the customer that you have taken, which is retained with you for more than 365 days, becomes a deposit. And I as an auditor need to qualify, I mean at least to tell in my CARO report that there are deposits taken. The moment I say that, there can be a violation of the deposits rules, and therefore the penalty of 1 crore to 10 crore or 25 lakhs to 2 crore with 7 years imprisonment. That is the gravity of the situation. So section 73 to 76 deposits. So CARO versus main report. Now if I comment something in CARO like this, that there has been a violation of deposits, what is its implication on my main audit report? Guidance note also says, guidance note on CARO says that you don't have to, every adverse comment in the CARO need not be adversely or qualified in the main audit report. If the severity is such that it will affect the true and fair view of your financial statements, then and only then you will have to comment. So every violation of the Companies Act certainly does not require a qualification in the main audit report. So that's the answer. And then of course, these are all the 185, 186. On deposits, there has been a welcome change as late as, when was that? 29th of June. 29th of June, there has been some respite. They said advance from customers up to 365 days still continues to be deposits. Advance for future services towards warranty, advance received and allowed by sectoral regulators, and certain minor relaxations have been given there, which I also covered in the material that has been given to you. As far as private limited companies are concerned, one good thing is they can take loans from the directors, they can take loans from the relatives of directors, they can take loans from the members that is shareholders, up to 100% of the company's net worth. Up to 100% of the company's net worth. If you do this, two things have to be complied. One thing is the directors and the relatives of directors have to give a declaration that this money is not from their borrowed funds. I mean, it is from their own funds, rather not from the borrowed funds. And this has to be specifically told in the financial statements. There should be a mention of the fact that the amounts have been taken from directors, relatives of directors, and members of the company. So the disclosure is required. Of course, there is one more interesting comment which we need to make in the main audit report about the transfer to investor education and protection fund. Now, what do we mean by whether the company has transferred the amounts required to the IEPF? So we need as auditors to know what are those amounts which need to be transferred to IEPF. I cannot say that because I didn't know the provision, I said everything has been properly done by the company. In fact, what it is existing is probably what we know. Dividends not claimed for more than 7 years need to be transferred to IEPF within 30 days from the end of 7 years. All of us know. Share application money which is pending, of course now it cannot be pending if there is any share application money beyond 60 days. Beyond 60 days it could become deposits. Beyond 7 years, this has to be transferred to IEPF. Okay? So maturity deposits and interest accrued, maturity debentures and interest accrued. In fact, section 125 of the Companies Act deals with IEPF, okay, which specifically says that, whatever is written in red is already notified, whatever is in blue is yet to be notified. If somebody has not claimed the dividends for 7 years, baddine tagolilla andre asalu elli hoggಬೇಕು? Sir? So which means if the dividend itself has not been taken, what about the shares? The share, that means the shareholder himself is not there, is not in a position to be identified. Section 125 says that that share also needs to be transferred. Along with the dividend, the share capital also has to be transferred into the name of the IEPF. For the moment, you don't have to do that because that provision which is in blue is not yet notified. Once it gets notified, I'm afraid, again it will say from the date it is published in the official gazette, it has to be transferred. So if you sleep over that, that much of time loss. So it has to be done within 30 days. So there are like that, other things which has to happen, cost audit, fraud reporting. Fraud reporting, we have to comment about frauds in CARO. We also have to, as auditors, talk about frauds as a separate responsibility under section 143 subsection 12. If in the process of audit, I come across any fraud that is being committed by the company, by the officers and employees of the company, not on the company. If some fraud has happened on the company, like in the case of, let us say, ICICI Bank, somebody has stolen the money or somebody has taken the ATM itself to his house. Okay? So that is a fraud committed on the company. So this need not be commented both on CARO as well as in as well as in 143.12. Now, earlier CARO we had to comment fraud on the company also. Now we don't have to comment on fraud on the company. In both the situations, we need to comment only fraud by the company, by the officers, by the employees of the company. What do we mean by fraud by the company? The company is inanimate. It is impersonal. When we make fraud by the company, it means fraud by the top management of the board of the company itself. So if such a fraud has happened, so then in the process of audit, I need to inform the management itself, give them 15 days time. Within 15 days, I think within 2 days I need to inform them and give them a time of maximum of 45 days, 60 days window for them to reply back to me, and afterwards I need to reply, I need to inform it to the central government. If the amount is more than 1 crore, if the amount is less than 1 crore, I need to inform just to the audit committee of the board. This is the requirement, and our institute has told what is fraud, there is a guidance note which is given, which needs to be looked into. With respect to auditors, one of the interesting changes that has happened in Companies Act 2013 is that an auditor in the class companies needs to be rotated. And we were, institute and a lot of chartered accountants have taken a big hue and cry on this, saying that this should be removed and things like that. I don't think this will be removed. This is already written in stone, it looks like. Now, to which class of companies? To which companies is rotation a must? For all listed companies. For unlisted public companies with a paid up capital of more than 10 crores. For private limited companies, rotation is required even for private limited companies. Rotation is required even for private limited companies with the paid up capital of more than 20 crores. And for such private limited companies or public limited companies where the borrowings are more than 50 crores. So you may have some of your clients whose borrowings are more than 50 crores. So such companies, I'm afraid, you can continue for 3 more years if you have already been as a proprietor for 5 years and as a firm for more than 10 years. Now one of the points that came out in such cases is, they said that you can, the original rule said, you can continue to be the auditor 3 years from the commencement of the act. The act commenced on 1/4/2014. So 3 years means by 31/3/2017, I had to stop being the auditor of the company. Which means for financial year 16-17, I sign as an auditor, I do the audit, of course doing the company, but mostly after the company. So after the company and up to the AGM, that means 15-16 itself should I retire, or 16-17 can I continue? Fortunately, there came a removal of difficulty as late as on 30th of June to say that the auditor in such cases will continue till the end of the AGM and he need not retire immediately. So most of the companies who have gone in for 3 years, they can continue as auditors for 16-17 also. One of the points to be noted is if an auditor is disqualified from being an auditor under the Companies Act, the disqualification could be by virtue of his being a shareholder in the company, his relative being holding shares of more than 1 lakh face value, for so many things like that. He also stands to be disqualified as an accountant for the purpose of doing certification, for the purpose of issuing audit reports under the Income Tax Act. So the same disqualifications as told in section 141 subsection 3 of the Companies Act is also applicable for tax audit cases. So if I cannot do the tax audit of if I cannot do the company audit, let us say, I'm just giving a typical example, 20 companies I can audit. Private limited companies, by virtue of removal of difficulties, they have removed certain difficulties, up to 100 crores paid up capital and things like that. So assume that I am an auditor, I'm a proprietor having 20 companies or public limited companies. I cannot audit the 21st company. Not only that I can't audit the 21st company, I cannot be the auditor, tax auditor of the 21st company also, because if I am disqualified from being an auditor of the company, I stand to be disqualified as a tax auditor of that particular company. Not only for the purpose of tax audit, even for the purpose of issuing, say, Form 15CB, say, Form 10 CCE, or any other certificates under the Income Tax Act, I become barred by virtue of me being disqualified. Now, is it applicable only to corporate clients? The answer is no. Even for non-corporate clients, even for partnership and proprietorship concerns, the same disqualifications as told for an auditor under 141 of the Companies Act has been built in section 288 of the Income Tax Act. So we have to see that. So on prohibited services, auditors are barred from doing certain services, which is called as popularly the prohibited services under section 144. Again, so beautifully they have numbered this section. Section 144 is a prohibitory section. So that is 144 prohibits the statutory auditor of the company from doing so many other services, most important of them the management accounting services. I cannot give management services. Knowingly or unknowingly, we may probably in our office, I need to always keep telling this in my own office, that probably if we are incorporating a company and then doing the audit of the company, or I am auditing the company, I am filing the ROC returns. What do I do? Can I do that? Can I do the audit of the company and can I file the ROC returns, annual return? No, or AOC 4? Yeah? Does it amount to management consultancy? Can I do the audit of the company and do a tax advisory? Can I do the audit of the company and do a tax representation? Fortunately, our institute, tax advisory and tax consultancy is told by our institute that it does not fit into the definition of management consultancy. Even for the purpose of section 288 of the Income Tax Act, they said that although you are disqualified from being the auditor or the tax auditor for the company, tax representation does not come within within prohibited services. So that's a good thing. Now, as far as ROC filing is concerned, my suggestion or my answer to this is, instead of calling it as filing of ROC returns and things like that, probably it would better be, say, certification charges for filing the ROC return. Because you have to certify, right? You have to certify. So use a better terminology, and if it is really restricted, then I'm afraid you will have to give up that particular prohibited services. Otherwise, the penalties are quite huge. I'm not going to talk about that because I'm sure that we are not interested in listening to penalties. We are interested in complying it and not going into the, we would not like to say, if the penalties are low, I would like to breach. If the penalties are high, then maybe I would not like to take a chance. I would say that as chartered accountants, we don't go by that mechanism. If the penalties are there, I would certainly not go to do it at all. Changes in Schedule 3. Simple changes is that on the face of the balance sheet in Schedule 3, we need to give trade payables due to, total outstanding dues to micro and small enterprises and dues to other than micro and small enterprises. Because this came in as a notification on 4th September 2015. In fact, last year by 4th September 2015, all our balance sheets were signed. Because it pertained, before September we should have done the AGM and it got signed. And this year, if I am copying and pasting and I have not read this 4th September 2015, because I look into only those notifications which are latest to understand, then probably there is every chance that I may be committing a mistake on the face of balance sheet. On the face of it, what they say. So please don't commit mistakes on the face of it, because this is exactly what the sadists especially would look into. The Financial Reporting Review Board or the group will find out apparent mistakes and penalize or refer the matter. So this is an apparent mistake which can easily happen. Again, avoid that. In fact, there is a distinction between what is a micro and small. In fact, in the notes we are supposed to give the details of micro, small and medium enterprises. I am not going to get into the details of it for paucity of time. Schedule 3. In fact, when I went to one of the places, they said that I am not signing the balance sheet of companies because you people have not done any sessions on Schedule 3. When Schedule 6 came, we did a lot of sessions in so many places. Revised Schedule 6. So, there was a lot of discussion on that. And now they said that there is, on 6th of April, there has been a change in Schedule 3 and you people have not done any sessions on that. For that, let me tell you, we didn't do any sessions because whatever Schedule 3 we have been following continues. But this Schedule 3 has got amended. What is the amendment? They did that the existing items in Schedule 3 will be called as Division 1. And they appended at the end of Division 1 a Division 2, wherein they brought in the format of balance sheet and profit and loss account and notes to all those companies to whom Ind AS is applicable. So for all those people, Ind AS Division 2 has to be followed. For all other companies who are following the regular accounting standards, which I popularly call it as the Bharat accounting standards. You need to know, for those companies I follow Indian accounting standards. For these companies, for the existing companies, I follow the Bharat accounting standards. When I talked about this, they said that it is Indian gas and Bharat gas. Yeah, gas also means generally accepted accounting standards. You can have a full form for that also. Okay, so you have a Ind AS Division 2 Schedule 3. For Bharat AS, you follow Schedule Division 1 of Schedule 3. Okay, consolidated financial statements has to be prepared by every company which has a subsidiary, and subsidiary includes associates and joint ventures. Now, And our institute has gone to the extent of giving a FAQ, which was not required in my opinion, to say that subsidiaries could also include LLP and partnership firm. We were always taking LLPs and partnership firms do not get into the subsidiary definition of the Companies Act itself, so why get into the muddle of it? But of course, they followed the substance over form and given a FAQ to say that LLPs and partnership firms, which are actually associates and subsidiaries in that sense, also needs to be consolidated. From this year, there is no, we were given relaxations for last year, only a standalone associate. How do I do that? You will have to follow the equity method and do it, not the line-by-line method which we do for the regular subsidiary. For joint ventures, use the proportionate consolidation approach. So these are the changes in consolidated financial statements. CSR, I'm not going to talk about it. It's been there for a long time. Component accounting. Where is the chairman? So till the chairman comes, we go at 5:15 is through. Okay. Component accounting has to be done by all the companies. Last year there was a respite. Component accounting in short means if the useful lives of the asset which has been told in schedule 2 is with respect to the major item. If there are items within the items, if there are assets within the assets which has different useful life, you will have to break it up and account it separately and depreciate it separately. That is in short component accounting. A lot of changes will happen by virtue of that. Institute has withdrawn 5 guidance note on accounting of ICI, primarily being revaluation of fixed assets, depreciation, and a couple of them. The good news is National Company Law Tribunal has been formed. I call it as good news because chartered accountants can now appear before this tribunal, unlike the Company Law Board. Okay? So, and the better news, better than the good news is this company, the National Company Law Tribunal has a bench in Bangalore. We don't have to go to Chennai Company Law Board. Not only the new cases, even the existing cases will get transferred from Chennai to Bangalore. A lot of liberalizations have happened in the case of name clearance. Now I can name without the objective being there in between. I can have, a lot of relaxations have been given. I can name a very funny name, Ula Limited or something just like that. I can call him, and they have given 23K hotels, 23 Limited. They need not be a objective based name, so that's the best part of the thing. NOCs are not required. Names including scope or scale. In fact, earlier when we used to have industry, we need to have a minimum paid up authorized capital of 1 crore. Now that is also dropped. All those scope-based names have been dropped. Conversion I have already told you. Amendment Act 2015, minimum paid up capital dropped. So companies need not have that 1 lakh or 5 lakhs. This was not very much required. I would have said that if a company cannot have a 1 lakh and 5 lakh, they should not have formed a company at all. That would have been, this amendment is not great. Company can run without a common seal and certain things like that. Companies Amendment Bill, there are a few interesting changes. No requirement for ratification of auditors. In fact, right now, so no requirement for ratification of auditor's appointment. Right now, every AGM has to ratify the appointment of the auditor. And we don't know if that is not ratified, what happens is a big question mark. If it is not ratified, we always take that it is already, it is not appointed, so existing auditor continues. So it is the same effect. If it is ratified, also same effect. If it is not ratified, also it comes back to the same effect. So therefore, they felt that ratification we will drop. That is what is there in the amendment bill passed by the Lok Sabha, waiting for the Rajya Sabha clearance. Relatives definition for the purpose of audit alone has got a welcome change. It includes only the spouse, parent, sibling, provided they are financially dependent. We always used to say that. Mukesh Ambani and Anil Ambani, are they relatives? Yes. Should they be, if Mukesh is holding some shares in the other company, he would not disclose to him for whatever reason. So should I really be debarred by his holding or things like that? Now they said, if they are financially independent, you don't have to take them as relatives. Again, this a word of caution is futuristic. Once the bill becomes an act only, it could kick in. Internal financial controls with reference to financial statements is told in section 143(3) itself. Deposits accepted beyond commencement of Companies Act to be repaid within 3 years. Unrestricted objective clause. This is the best thing. Once this kicks in, I can say I don't have to have a main objects clause and a subsidiary object clause. I can just say any object which is legally permissible in India can be done by this particular company. So that's the best thing that can happen. So restriction on investments of more than 2 layers of the company right now, which is there in 186, also is proposed to be abolished. Certain small things have been. So what are the precautions to the auditors? Be up to date, be current, require great reading, training to self and entire office. When it is not sufficient, if you just attend conferences, you need to go back, Babu, you need to go back and train your office people. It is not sufficient just for me to be trained. Then educate and forewarn clients, what I told you about deposits. You need to tell the implication of your reporting or the implication of any transaction before it is done. When the biggest challenge is, if they ask you, you will tell them. Otherwise, you will have to ask them to come and attend a session like this, which they will definitely not attend. That is another big challenge. Have a holistic view. You don't know, there may be a 185 loan can be given by private limited companies. There are certain relaxations. But by giving that, you are so happy that 185 loan can be given to the directors. Are you actually violating section 222E of the Income Tax Act? I mean, take a holistic view when the decisions are told. The revised strategy, choose your partner wisely, because if the partner commits a mistake, the firm will be at stake. Rotation of job. I mean, rotation of auditors have been told in the Companies Act. I mean, I would go a step further to say rotate the job in-house within the partners so that, each one can give the best between the years. Verify printouts. I mean, this I just inserted last morning. I mean, this morning, most of the mistakes happen because the printouts are not verified. This may be too, I would say, the old thinking. Now, today the youngsters are so used to seeing things in computer and then saying digital signature and uploading it. They don't even bother to keep the documents. But I think that there is a safety mechanism in your taking the printouts, verifying it, signing it, and then rechecking it with the segregation of duty happening in between. I properly keep telling that in the interest of going green, and what happens if you take printouts is going green. You have an option of either going green or going red. If you don't take the printout and sign through the thing, you can go red afterwards. So convert existing companies either to LLPs or partnership firms, subject to those conditions. If a businessman comes and says, sir, I want to form a company, first keep avoiding, why do you want to form a company? He will not know what is a company. Earlier we used to say, we want to form a company means we used to just form a company. Actually, then only he used to know a company means this, is it? I thought company means KG Acharya and Company. I mean, our office is a KG Acharya and Company. So something like that, I thought. So that don't get into the company's thing unless it is required. Get professional indemnity wherever possible because the risk is so high. Increase in fee charge. I missed out one point. So if you want to do a quality job, you need to have quality people for it. Quality people are at a cost, are coming at a cost. So at least to recover their cost, I think you will have to increase your fee. I mean, earlier I used to say increase your fee, increase your fee. Now I have to tell the logic behind why you have to increase the fee. So you will have to deploy people, you will have to, I keep telling this, you will have to attend so many conferences like this, at least recover your conference, what is it called, delegate fees. I mean, you will have to incur all this in the fee, the fee that you pay to your clerks and all the stuff are going manifold, are our revenues going up for a particular client in the same particular direction. Otherwise, I don't want to use the last one, retirement from profession. So this is the World Bank ranking. We in India stand at 130 in the ease of doing business. And in the starting of business, we are at 155 amongst 189 countries. Narendra Modi ji, our Prime Minister, beloved Prime Minister, is trying his best to increase the ranking. We as professionals have a great role. I was telling with Mr. P.R. Suresh that ICDS has got wiped out. We should see that it is wiped out forever because it is not going to be any ease of doing business. Whatever required there has to be put into the act itself. I think finally the business should be the focus and not the impediments in doing the business. I think as individuals, as professionals, and as institute, we have a responsibility of telling the government also what is required in the interest of business and not the businessman. Okay, definitely in the interest of the business. Okay, so I am a chartered accountant in practice. Pampanna, I am a chartered accountant in practice, and I always feel that practice makes a man perfect. You were not there when I started this. I can only thank you for making me perfect by making me practice, in sessions like this. Thank the Bangalore branch. Now, before I thank you, I left with one particular question in the minds, saying that why are we called as practicing chartered accountants and not as perfect chartered accountants? Now, all of us have passed one of the toughest examination called CA, Chartered Accountancy, and we were so happy the day we passed our examination. We thought that that is our life's ambition, to pass the examination. But today, in hindsight, again, when we say, well, that was one of the we saw Habitat talking about houses, and I thought that if I buy a house property in Bangalore, I am successful. Then I bought it, and then what next? Now, this is where I have always realized success is never a destination. Success is never a destination. Success is only a journey. No? We need to continuously keep updating ourselves, and this is what I meant by practicing chartered accountants. Practice makes a man perfect is one of the quotes, but practice what you preach is the real meaning of practicing chartered accountants. So chartered accountants do not just preach. Chartered accountants do not just talk about code of conduct. Chartered accountants just don't talk about ethics. They practice ethics. And I firmly believe that, that's what I read one of the quotes written by Chinmaya Swamiji, who wrote like this: even a fool can study the scriptures, only a wise man can practice them. Now, I would slightly put it in our own language. Even an ordinary businessman, an ordinary man can study the scriptures, but can study the code of conduct, but only a chartered accountant can practice them. So that is why chartered accountants are called practicing chartered accountants. So we practice what we preach, and that is why the alphabets of trust, CA, is kept in front of us. And I would say that if we live up to the trust, we live up to the dreams of the people who have set up our institute, and live in that particular good dreams. Thank you so much, and thank you for your patient hearing.
Thank you, sir. A huge round of applause for CA Gururaj Acharya. I'm sure all the delegates on the way back home, whenever they step on the brakes, will remember I-Foker, thanks to sir. I request CA G. Shivakumar, Chairman, Hubli branch of SIRC of ICAI, to present the vote of thanks for this session.
Good evening, everybody. Today's topic was somewhat restricted to challenges under the Companies Act and other statutes. But as a person or as an institution or as a country, anywhere there are two types of challenges: challenges within and challenges outside. So challenges are always there, but nowhere to run. If there is no challenge, there is no thrill in life. So therefore, let us face these challenges. And I thank, on behalf of the Bangalore branch of ICAI, today's speaker, Sri K. Gururaj Acharya. Thank you very much, sir. And also on behalf of all the 8 branches of Karnataka, I thank Sri Gururaj Acharya for having presented his wonderful paper. Thank you very much, sir.
I request CA G. Shivkumar to present a memento to CA Gururaj K. Acharya as a token of our appreciation and gratitude. Thank you, sir.